because the more physical silver you get out of the market, the more trouble these banks will have. And a lot of the ETFs are controlled by the bankers, so it's the last place you want to be is in ETFs. You want the real thing. And of course, you can participate via the silver miners. I think they're going to do really well. I think the miners have a lot to catch up, just like silver has a lot to catch up with gold. Monday, October 21st, 2024, Monaco 64, home of alternative economics and contrarian views. So today we're going to look at whether the derivatives time bomb for precious metals are going to, really destroy the bullion banks. Are they going to get their comeuppance? Is silver ready to really squeeze to unimaginable levels? It's possible. And derivatives, I have a lot of experience in derivatives. I worked as a futures and options broker for over 20 years in the city of London, mostly for government bonds though and interest rates, not for the precious metals. But I've been buying physical gold and silver since 2002. And I knew right away that there was something funny in that market. And if you want to find out more about how derivatives work, go to my playlist, derivatives playlist. And there's many videos there about it. But suffice it to say, derivatives are basically bets on future prices of commodities. And that's how it started really in the 19th century. It was for real things. It was growers and producers trying to hedge their prices and costs. Yes, there's always been speculators, but ever since the collapse of Bretton Woods in the 70s, the powers that be have helped develop a huge financial derivatives market in order to control prices through the derivatives. And they've done the same thing with gold and silver, and that's what we're going to look at today, whether I think the big silver shorts are going to get their comeuppance. And it's been 1,358 days, and I remember February 1st, 2021 really well. That was, the Monday, just like today, and silver got above 30. I think it was 30, spot 10 or 16, and then it just turned around. And we heard later on from the CFTC and regulators that they had to tamp down the silver market. So they threw everything at it. And why do they do that? Well, because silver is in our DNA. If silver starts going through the roof, people wake up to the fraudulent nature of our, well, you might want to call it monetary system, but it's more like a fiat currency debt-based system. And that's why they've been so determined to keep the price below $30. It looks like they're losing that battle. And why are they losing the battle? Well, because countries like China and Russia are buying real physical silver for industrial uses. And recently we've seen Russia announce that it's going to buy a lot of silver, platinum, and palladium for its reserves. What they're going to use it for, we don't know. But one thing's for sure, during wartime, silver is very important. I just saw yesterday that the Chinese are preparing supposedly for war. I saw Xi Jinping wearing a military uniform in front of hundreds of other military men. So things are getting very interesting, but we're going to focus on the derivatives side of things. And I'm going to recommend a really good interview I did about 4 weeks ago, about a month ago, with David Jensen, who's a precious metals analyst. I recommend you check out his Substack. It's going to be in the video description that I did with him about a month ago. But he was talking about the London Bullion Market, which is the LBMA, London Bullion Market Association. It's where the bullion banks that are also based in New York, but they're based in London, they trade the physical gold and silver, but in actuality, it's not. It's an unallocated market, and the title of the interview was "The London Bullion Market Has Sent Gold and Silver Supply to the Moon." And how do they do that? Well, they just create paper claims out of thin air. And some people think it's leveraged 400 to 500 times to 1 in London. So I recommend you watch that. But what I want to focus on now is the big bullion banks, US bullion banks. And before we go deeper into the bullion banks and how they're positioned in the precious metals, just want to show you mine production of silver worldwide from 2005, to 2023. And you can see that it picked up a little bit from 2006 to around 2012, mine production. But ever since 2012, for the last 12 years, it's been really flat. It hasn't really gone up. So keep that in mind. Mine production is going nowhere. If anything, it's probably going to drop as well. So, okay, I got all this information, and I'm going to put a link below in the description if you want to look at it, from the Office of Controller of the Currency in the United States. And it's their Q2 report. That's the latest they've got. And I've got table 13 here, notional amounts of derivative contracts. What's notional amounts? Well, the thing with derivatives that it's really dangerous, and that's why I called it a time bomb, is that it's usually highly leveraged. So let's say you buy $1 million worth of gold, you only have to put down $50,000 in a derivatives contract or futures or options. And it's the same thing for all other derivatives. So the notional amount is the number of contracts that you buy times the size of the contract. But it doesn't mean that to say that you've put down that much to have control over that contract. So you can see here that JP Morgan Chase Bank, Goldman Sachs Bank, Citibank National Association, Bank of America, and Wells Fargo, if you add up all their total notional derivatives amount, it's almost 200 trillion. And the total for US banks is 208 trillion. You can see at the bottom. So this is why we know that the precious metals exposure in the derivatives markets come from these big banks, from these bullion banks. So it's quite easy to ascertain. So now I want to show you another chart here from the same Office of Controller of the Currency report. And it's figure 18, and it says notional, amounts of precious metal contracts by maturity. And it says insured U.S. commercial banks and savings associations. So FDIC could insure these guys for playing these games. But what I wanted to show you here is the hockey stick nature of this chart. And you can see that up until 2021, interesting year, isn't it? 2021, when the silver squeeze movement started and it was tamped down, and it's frustrated the silver bugs, or the silverbacks, if you want to call it, for 1,358 days. And it's one thing that I've always said: you need to be patient. If you know what's going on, yes, it might take a long time. And what's going on? Well, what's going on, as you can see, the amount of precious metals derivatives has gone through the roof. And I would argue that a lot of it is to do with silver. They don't really tell you exactly how much gold, silver, platinum, palladium there is, but look at how much it's increased. Yeah, and this is billions of dollars. It's gone from around 50 billion to almost half a trillion of exposure in precious metals derivatives, notional amounts. But what I was trying to tell you as well by showing you the chart of silver mine production is that a lot of times we get people who try to say that there is no manipulation, that the bullion banks are only hedging for their clients who are silver producers. So my question to these people is, if that was so, how come silver production has gone nowhere in the last 12 years? Why do they have to hedge so much more, according to the OCC report, right? And I think they're not hedging. They're just naked short selling paper, just like David Jensen said in my interview, that the LBMA, they have sent gold and silver supply to the moon, not because the bullion banks and the central banks have gone out and bought silver mines and produced loads of silver. No, they just typed it into a computer and they've created paper or digital contracts out of thin air. And as long as people don't demand the physical silver, and it was fairly easy in 2021 to stop, like to control the price, because it was mostly retail investors in the silver squeeze, they were okay. But now that countries like China, India, and Russia are buying real silver, I think they're in deep trouble. And that's why we've seen silver finally break out above 30 definitively. It's been a frustrating last 1,358 days. But what have I been doing in terms of silver since then? Well, I've been trying to buy as many silver rounds or silver coins, bars. I've put some of my savings into the silver miners of late, and that's what I'm going to continue to do. And I'm not concerned if silver explodes to the moon or if silver keeps creeping up slowly, because I know that eventually there will be price discovery, and this paper game on the LBMA and COMEX is gonna end. And is it any wonder that there's so much talk of world war against China, Russia, and the West? Well, I'm not surprised. The monetary system is getting challenged, and I think people like Putin and the Chinese, they know the Achilles heel of the Western financial system, and I think it's this, in my opinion. So that's what's going on. And what happens in the silver squeeze? Well, the bullion banks, and I think the bullion banks, of course, are working together with the central banks, of course, and the treasuries of the United States, of the UK, and maybe some European countries as well. And why is that? Well, because they need to keep silver under control, because a spiking silver price is a really bad signal to the general public. It was a bad signal in 1980 when Paul Volcker had to let rates rise to 20% to save the dollar. Silver spiked from below $5 or $6 a year before, or a year and a half before, all the way to 50. The same thing happened in 2011 when all the pigs, or Portugal, Italy, Ireland, Greece, and Spain, the European sovereign debt crisis was kicking off. Silver went to 50. There was a problem there. And again, they came in and smacked silver. But now there's there are new kids on the block, and they're big kids. Russia, China, India, and they want real physical silver. So what the bullion banks are going to have to do, they're going to have to close their short positions. And how do they do that? Well, by buying the futures that neutralizes the position. That's what you do in futures. And they might even start going long. Some people argue that actually JP Morgan has a lot of physical silver. Who knows? They might. But one thing's for sure, they probably want you, the general public, retail, to stay involved in futures and ETFs. They don't want you buying physical, and that's why you should buy physical, because the more physical silver you get out of the market, the more trouble these banks will have. And a lot of the ETFs are controlled by the bankers, so it's the last place you want to be is in ETFs. You want the real thing. And of course, you can participate via the silver miners. I think they're going to do really well. I think the miners have a lot to catch up, just like silver has a lot to catch up with gold. So again, this is not financial advice. This is the way I see things. You should do your due diligence and your research and decide for yourself. But let's quickly look at the markets then this morning. It's 8:41 a.m. London time. Spot gold has made another high overnight at 27.33. Right now we're at 27.25. We're up four bucks. Silver made another high at 34.14. Right now we're at 33.92, up 21 cents. Yeah, it's still pretty tame, the move today. Silver's only up 0.6%. It was up over 6% on Friday. But I have a feeling things are going to get more interesting either way when the U.S. markets open later on. What about the stock market indices, the futures? Well, the Dow's up 50 points. NASDAQ is down 25. S&P is unchanged. The currency markets, fairly quiet. Sterling is down slightly here, about 0.2% at 130.26. Crude oil is up a little bit here. WTI is up 0.2% at 69.10. And that's about it. So let's keep an eye on silver and gold, of course, as well. I'm not going to get excited or despondent. I'm going to keep an even keel. I've learned over 20 years that you have to be very patient in the precious metal space, especially if you know what's going on in terms of the monetary system, that it's not fit for purpose. And why is it so hard? Well, because the powers that be, they want to perpetuate this debt-based system, so they can't have gold and silver be in the spotlight. So they're going to do everything they can to keep people away from it. But it's not gonna convince me otherwise. I always think, what's the other alternative to having gold and silver as monetary savings? Well, there isn't. So there you go. With that, I'm going to wish you all a very good day and a great start to the week. Take care. Bye.